Hi friends, Simit here from InformedTrades.com. Today is May 20th, 2014. Time for our daily Forex chart review. Basically, in these sessions, I share the trades I'm placing, adjustments to existing positions that I'm putting on in the market, all to help traders learn. You can sort of learn from my mistakes, learn from my successes. There's a whole bunch of information. If anything I'm presenting is unfamiliar to you, check out InformedTrades.com. We have a whole bunch of information to help traders learn not only the styles and methods that I use in my trading and markets that I'm trading, but many other approaches apply to many other markets, other time frames. Check it out. Register as a member. Set up a practice trading account. Share your trades. Share your experiences, your questions. We can all sort of learn together. Okay, first chart I'd like to start with, as is customary, is a chart of gold. I do have a considerable portion of my net wealth in gold, so I like to monitor its price. Right now, what we're seeing, support at 1280 is key. We do have a pattern of rising lows, higher lows. So that's encouraging that this trend line is still intact, and we see anytime it dips below it, we see a wick pattern emerge. Bulls, which could be indicative of bulls stepping in to defend the trend line. They are defending 1280 support as well, so that's all good for the bulls. For the bears, or I guess the next major battle between the bears and bulls, is getting over these two moving averages, the 50 simple moving average and the 200 exponential moving average. If both those can be cleared, I think we could see a rapid appreciation back to the near-term highs here, back to around 1380. So let's see where that is. From the downside perspective, maintaining 1280 is important. If it closes below that, I think that'll pave the way to 1180 perhaps, all the way down here. So that's the same analysis. I've been sort of saying the same thing on gold the past few days. Just sort of watching how we emerge in this little congested zone right here. Okay. Moving to the Forex trades, one big thing that sort of affected me adversely last night was the decline in the Australian dollar. A bunch of news came out of the Reserve Bank of Australia, including their statement that they will not be raising interest rates. The market reacted negatively to that, sent prices down. Okay, so that did hinder my trading. And another thing that just happened now, that my Aussie Canada position just got closed out, and something just happened literally since we started this video, is my Kiwi dollar trade got closed out as well. So you can see it just hit my stop right here. So those two trades didn't work out well for me. In hindsight, I think I was pretty consistent with the technicals. I liked the approach I was using technically. I'm comfortable with that. News came out, hit me the wrong way. So I don't think this is bad trading, even though the results in loss. Bad trading is when your plan clearly isn't working, or you stray from your plan. Okay, so of course there is always a room to improve your plan. That's something I definitely want to consider and be on the lookout for. So those are the two trades that hit me negatively last night and this morning. Now I currently have 3 trades on. 2 of them are at, or one is at break even, so I have risk exposure on 2 of them, and I just put another one on as well, which we'll get to in a moment. So let's take a look at Canada Swiss. Okay, so I took half off. For those who recall, I took half off on this candle, and the remainder is at break even. The target profit is here. So let's see if we can get there. Nothing much else really to do with Canada Swiss. Euro dollar. This order, yeah, okay, so the main thing here is, we are at between key Fibonacci levels here. The hammer off support is what I really like. This support goes back to here, April 7th. It was a resistance level here in January 24th. So this level is fairly well established. Plus, we're in an uptrend. You can see the chart sloping upwards. You can see we're above the 200 exponential moving average. The fact that we're below the 50, sort of between the 50 and 200, is one cause for concern. And perhaps if the trade doesn't work out, that's something I may want to reflect a little more on. That's in fact, that's something I do need to do, an exhaustive review of my trades, especially over the past 2 years. To see, get a better idea of what's working, do more of that, and what may be not worth the effort, and cut out some of that. Okay, so that's euro dollar. Nothing really here, just waiting. This position is slightly out of the money. I entered here the black line. We're a little below that. Still well above the stop. Okay, and of course I won't be moving to break even until we can get at or close at or above 38.06, the dashed orange line on the chart, the minor resistance level there. Dollar Canada. Okay, so this is, I'm short dollar Canada, shorted at this gray line. The position is slightly in the money. Need price to close at or below this green line, or excuse me, this orange line before I can move my stop, which is currently here, down to break even. The rationale for this trade, we were in a downtrend. Price, we see a pattern of lower highs. We're below the 50 simple moving average. This is another instance where we're between below the 50 but above the 200. So some might argue the trend isn't especially clear. I thought it was sufficiently clear, but that may be something worth considering, and doing an analysis, review my trades, and this is how I should view moving averages. Okay. Now we're at we pulled back to 50% Fibonacci retracement, almost there. Shorted. If we can close at or below 108.48, I'll move to break even. Okay. And one other order I put on this morning, which is not yet filled, is pound yen. And now, for those who've been watching the videos, I put on a lot of yen orders in April. Some of them lost, some of them made money. And all in all, I probably made a little bit of money, not much. But here, we see 3 candles in a row. This is almost a triple doji right here, and at support, also at a halfway mark, a little more than that, from this swing low to this swing high. So we had a decent pullback. We're right just below the 50 simple moving average at the support level established in early April. And we have, it's really a triple doji. It could be a quadruple doji today. So I'm viewing this as an accumulation pattern in the context of an uptrend. So I thought these were all signs that justified entering. I entered here. I put my stop at this red line, which is between 2 support levels, right? So 60 pips out, or 80 pips out, excuse me. And my target profit is going to be all the way higher for the yen, as I mentioned this before. I want to hold on to a long-term position that is short the yen. That's what I'm trying to build, a safe position, as large of a position I can safely build, shorting the yen for an expectation of a large gain. I'll move my stop to break even, so I'll move my stop to this line, to here, and de-risk the trade if we can close at or above 171.64, and I might take half off right around here, probably at around 174.23. So it'll give me 3-to-1 reward risk, and of course if I hold it out for the remaining half for 192, that's sort of the real trade that I'll be looking for. See if it works out. See if I can safely play that type of trade. I guess one other thing I forgot to mention. Those are my trades on. So as I've seen, there's 3 orders I have on at the moment. One has been de-risked, the Canada Swiss trade. The other 2 trades are still on. One thing I want to mention is pound. Aussie. Okay, because this position also got closed out when the Australian dollar lost a significant amount of value last night. However, the trade had been de-risked, so when it was going in my favor, I moved and it closed below this level. I moved my stop to break even. Now it didn't hit the target profit, but it did rally back up and hit my stop. So I got stopped out here, but I didn't lose any money. So that's one of the advantages of de-risking trades and moving your stop to break even when you think it's safe to do so. That's about it for my trading for today. I do have the pound yen order that I put on documented on my blog on InformedTrades.com. Check it out. Share your comments there. That's about it for today. Any questions you have, join us at Informed Trades. Best of luck in your trading, and we'll see you tomorrow. Take care.